Do you have Bitcoin, Ethereum, Cardano, Solana, XRP? Well, if you have any crypto assets, guys, you want to watch this video. The Fed just released a bill that went into effect January 1st, 2024 that basically implies for everyone to report any profits in crypto over $10,000, guys. And if you don't, it is a felony. You can go to jail. So guys, if you have any type of cryptocurrency, any type of crypto assets, you want to watch this video, because today I'm going to explain step by step on what this means and how you can protect you and your crypto assets. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q, and I created the first cloud-based software that allows you to put your credit repair into your own hands. If you're new to the channel, I'm super excited because I have a banger. Today's video, we're going to talk about these cryptos and protecting it. But before we get into the video, guys, please like and subscribe to the channel. It allows YouTube to push this content to a wider audience, and also allows us to leave the lights on. Guys, please like, subscribe to the channel. If you have anything derogatory in your credit report, I mean anything negative, charge-offs, late payments, bankruptcies, medical bills, guys, you name it, please go over to creditapprove.com. It's the website and the software that I was telling you about that allows you to put the full experience to your own hands. Guys, people are removing thousands of dollars worth of debt by themselves. They are no longer using credit repair companies. They are putting this information and this experience into their own hands and appreciating on a deeper level. Guys, please go to creditapprove.com, check out the software, and start removing these items, guys, if you have anything derogatory on your credit report. Now let's dive straight into the meat and potatoes of this video, guys. In today's video, I'm super amped up about it because this is scary. I'm an avid crypto investor. I've been in crypto investing for 6 years now. Very much endowed when it comes to the crypto space, and this is scary to say the none the least. Now, I know that a lot of people go into crypto because they want privacy. You know, they want to be able to get off the grid and not have their money, their hard-earned money, being covered and tracked by government entities. And this is one step closer for that dream to pop. You're not going to be able to hide your crypto. You're not going to be able to be on decentralized ledgers and be able to buy whatever you want. Now they are basically marketing that crypto is being used with privacy to buy black market deals, human trafficking, things like that. And Janet Yellen has been talking about crypto in a negative space for some time, and that is a gateway and a door and a bridge for them to actually come over and actually get into the profits. Now, this is interesting because I honestly think that we are at the precipice of this ETF filing that Bitcoin just filed. No, that Bitcoin, that the governments and entities are filing for Bitcoin and XRP. And I think that once those ETFs get approved and all of this new capital reaches into the market from these institutions, I think that a lot of people is going to make a lot of profits, and they are already knowing this. Now, the whales, which is the people that control the money, they already know when these markets are going to boom because they're all working collectively. Now, this is super scary and sketchy to say the least, and I honestly think that this is one reason why, if you are a crypto investor, you need to look into getting into other countries. Just look into it at least, because like countries like Puerto Rico or Dubai, they don't have any capital gains tax or crypto taxes. So if they decide to tax your crypto gains 46%, 30%, then that's a big chunk, especially if you have a lot. So just think about it. So I want to read some articles from Crypto Slate that came out yesterday, and also Forbes. So the article says a new crypto tax report obligation came into effect on New Year's Day. Crypto advocacy group Coin Center said on June 2nd. According to the Coin Center, those new rules require anyone who receives at least $10,000 in cryptocurrencies to report transactions information to the IRS. Required data includes the name, address, social security number of the sender, as well as the amount, date, and the nature of the transaction. Now, $10,000 is very interesting because $10,000 is the exact same number that the banks have to report to the IRS if you deposit it in your account. So this is like a setup, to say the least, because the banks are already going to report the $10,000 as soon as it hits your account. So if you made $40,000, you sent $10,000 to your bank account from a crypto exchange, they're going to report it anyway. So they're already going to know who to come out for, and they already know who to arrest. It's not like that, you know, you can hide it and they have to find you. No, they already know, because you have to go through a bank to actually make these transactions actually go through. Crypto is nothing unless you actually can use it at a store and swipe it directly from your cold storage wallet or something like that. But until that happens, you have to put it on the exchange and transfer it into a currency to actually be able to buy things with that currency. And the IRS and the government's already cornered the banks when it comes to this $10,000 mark, because that's the mark that they have to report anyway. So as soon as you get the deposit in your account, they're going to report it to the IRS, and the IRS is going to be at your doorstep in 15 days. The advocacy group added that those who fail to file a report within 15 days of a transaction can be charged with a felony offense. Guys, if you are a squeaky clean person and never ever had any run-ins with the law, imagine getting a felony for not reporting your crypto gains in 15 days. Coin Center noted that the new rule book took effect on January 1st and is self-executing or immediately operational and enforceable without further action. So it's already in effect. There's nothing that we can do to change it. Guidance on the official IRS website states that the relevant rules apply to cash transactions over $10,000 in business and trade. Now, I'm gonna talk about the business and trade thing a little later. It does not explicitly mention crypto or digital assets under its definition of cash. However, the January rule amends the Infrastructure Investment and Jobs Act, which itself took effect in 2021, and extend the definition of cash to include digital assets. So they included the definition of cash to be included into digital assets in 2021, even though it did not say it outright. They said cash. So Forbes released an article basically narrowing down, because once this came out, everyone on Twitter went crazy and it was a lot of controversy over it, and Forbes created an article to basically clear the air for this whole bill. So this is what it says. Applicably to all business entities and individuals engaging in business activities. The first key point to understand that the $10,000 crypto reporting requirement applies to payments received in the course of a trade or business. Whether you are a sole proprietor, a freelancer, or an S corp, or a full-fledged corporation, if you receive payments related to the business activities, this rule is applicable to you. It's important to know that it doesn't discriminate based on the type of business entity. It also says limited to payments from U.S. persons. This requirement specifically pertains to payments received from other U.S. persons or entities. If you're dealing with an offshore DOA or foreign entities, this reporting does not apply. Therefore, if your crypto transactions involve inclusively international parties, it is not subject to Form 8300 reporting. So this is only for businesses. It's not for persons. So that's because businesses, in my opinion, this is my opinion, I think they tailored this bill towards businesses because businesses get the biggest tax breaks, right? So if you are a self-employed or if you are just a worker, you are going to get hit with the most tax disadvantages than any other person in those areas, and because the capital gains tax is already applied to you. Now, most businesses have write-offs, and they can write off and finagle and finesse their business to make it where they don't even pay any taxes, and they give those businesses incentives for that, for the rich to get richer. Now, that's why I feel like they are tailoring towards businesses. If you are a person that has this, you automatically going to get taxed the heaviest anyway, and no bill needs to be applied for that enforcement. So guys, let me know in the comment section. This is super interesting, to say the least. Let me know in the comment section how you feel about this. Do you feel like this is something that is going to stop human trafficking, stop, negative transactions done on the black market? Or do you think that this is invading people's privacy when we were one step closer to getting them out of our business? Let me know in the comment section, guys. I will respond to all the comments, and let me know. Until next time, take care of your credit and take care of yourself, guys. Take care of yourself.